Welcome back to Fast Money. Check out the cool crowd that turned up outside the New York Stock Exchange this morning for Chewy's IPO debut. And that's not all that turned up. Shares of the pet food company surging nearly 60% today during a ferocious first day of trading. Let's get to Leslie Picker down at the NYSE with more on this. Hey, Les.
That's right, Melissa. Chewy shares soaring today, up nearly 60% in their debut. It's the largest initial public offering for a U.S. e-commerce company ever. Chewy and parent company PetSmart selling a combined $1 billion to investors. The deal was massively upsized, pricing above a boosted range and selling more shares than expected. PetSmart received the bulk of the proceeds. The retailer acquired Chewy just 2 years ago, and in its debut today, Chewy is worth quadruple the amount. So what brought investors in the door today? Well, Americans are spending more on their pets, and they are spending more money online. Chewy says its customers each spent $334 on average in 2018. Chewy says its sales last year would have grown 20% as a result of increased spending without even adding any new customers. All in, Chewy's top line grew 68%. Consumers are pivoting from buying pet supplies in store to online. E-commerce represented 14% of pet industry sales in 2017, up from 4% in 2015. It was projected to grow 25% in 3 years. But as those trends hold, more and more consumers are noticing supermarkets, warehouses, e-commerce companies, including Amazon, have been making a big push into the pet world. Now, if they choose to lower prices, that could put an even further dent into Chewy's already negative margins. Melissa.
All right, Leslie, thank you. Leslie Picker at the New York Stock Exchange. Tim Seymour, do you like Chewy?
I don't like Chewy. I do think people are willing to do almost and pay almost anything for their pets, and good for Fido. But I think at some point, again, it's about where is the moat of the business, and it's exactly that. Big box stores are becoming very competitive. You're actually seeing private label stuff. So no, I'm not chasing Chewy.
Good for Fido, good for Flip, good for Dodger.
My boy Dodger. This is an interesting shout out to Dodger. Interesting that we're talking about a non-tech IPO. We spent a lot of time over the last few months talking about some of those smaller float ones that have done really well. Zoom, PagerDuty, Revolve is just ripping right now. So to me, what's really interesting is going to be next week when we get Slack and its direct listing. And, you know, we have one big comp. It was Spotify. It was last year, which up about 9% from that one. We don't talk about it a whole heck of a lot. There's been a lot of debate about direct listing versus some of these smaller float sort of IPOs. So to me, I think that the Slack thing, you know, up supposedly $17 billion from last year when they last raised it about $7 or $8 billion. That could be very telling, I think, for broad tech here.
What I have a problem is Chewy loses money, right? So we've decided to pick the ones that we want to reward that lose money. It lost $268 million. Why would this stock, at the point of it, at this point at its growth period, why would they lose money still? And to Tim's point, this is an online retailer.
Yeah.
Why I would go into there if it was a standalone brick and mortar.
Really?
Yeah, because at least there's
they were
some
losing money, but they were brick and mortar.
No, because if there was brick and mortar, at least you could make the case where you don't want to go on Amazon and buy it. You want to go in there and get some sort of an expertise about your pet. But if this is online, why don't I just go to Walmart? Why don't I just go to Amazon?
Apparently, the customer service is amazing on Chewy. They will send you, for instance, a portrait of Flip to hang up, or they send condolence letters when they learn that you've lost your pet.
Well, so look, I think I'm a pretty normal, right? Now, you know me a long
really
time.
Amazing.
Somewhat normal, right? Normal family. I mean, that's what I think.
Family's normal.
We have 3 dogs. I'm telling you right now, if I say, let's go out and buy me something, the kids will look at me like I got 9 heads. You want to go out and buy the dog something? They race to the car. I'm not even kidding around. It's ridiculous. I say you buy this thing. The argument that you made was true 2 years ago when PetSmart bought them for $3.5 billion. Now they have like an 8-bag on this thing, and I think the world's actually in a better place for Chewy. So despite everything you said,
why do they lose money though? Why do they lose $268 million? Why do they lose $338 the year before? It just doesn't make sense to me. It almost gets back to the argument that we have on this desk. When they come public, who are they coming public for? Is it for shareholders to benefit
losing money
in
because
profits?
they're spending on growth. You like Amazon, don't you?
Yes, but Amazon could turn it on and off whenever Amazon wants to.
By the way, in cannabis land, the companies that are offering CBD pet food and products, Curaleaf has pet products. I mean, these things are being lifted off the shelves like crazy.
There's a moat around that, though. That's the moat you were talking about.
I think so. More there, because there truly is a regulatory dynamic and people that have a first mover.